Hello everyone, Raymond Opoku right here once again with a brand new Forex market trading lesson. Our focus today is on the fundamental analysis using the investing.com's economic calendar. Fundamental analysis entails a lot as pertaining to the strength or weakness of a country's economy. But today we are going to go one-sided. That is, we are going to focus on the economic indicators that are reported on the economic calendar week by week. We are going to talk about how to use fundamental analysis to influence the trades we take positively, what to do when high impact news is coming up, the most important high impact news that we should focus on, and a whole lot. There are some bonuses that investing.com offers to us. So let us just jump right onto our screen and see what we have for today. In order to gain access to the investing.com's economic calendar, you first have to visit investing.com, which I already have on my screen. So let us just jump right onto my screen. Locate the menu, hover your mouse over the tools, and then the economic calendar will jump right at you. So just by a click, you have the economic calendars page displayed on the screen. We can actually change the period of time. You can see information from yesterday, today, tomorrow, this week, next week, and we can actually customize the dates to suit our preferences. We can also filter a lot of information here depending on the country we want to see updates from, the time, the category, and the level of importance as well. You can actually select and deselect. After that, you click apply and it will be added to your calendar. Let me minimize the filters. Now the focus right now is on the calendar, and before we move on to the calendar, we have a time zone changer over here. You always need to check the time zone to avoid any confusion, because actually the investing.com's default time zone is not the one that I have right here right now, which is the GMT. So we have the time over here of the economic news release, the currency, which the economic news release would affect, the level of importance. Under the filters, I've actually chosen all the high impact news for the day. That is the most important news. That is actually the ones that have the potential of moving the market. That are the 3-star news. The actual event is here, and this is the actual results if the announcement has already come. The forecast, that is the expectation, and the previous results of the specific fundamental news that we'll be looking at. And right below, we have the legend. This is the most important part of the legend. For the news that are represented by just a single star, low volatility is expected. The one that are represented by 2 stars, moderate volatility is expected. And the most important ones that are represented by the 3 stars, which we have for today over here. For those ones, only high volatility is expected. So just a simple knowledge of the economic calendar would help you become a better trader, and we will get to know about most of them going on. After you figured out your way around the economic calendar, you would ask yourself, what importance is the economic calendar to me as a trader? It is so important because economic news releases mostly have the tendency to mess up your trades or to have a positive impact on your trade. The results of economic news releases on the markets are so unpredictable. If we lived in a perfect world in the Forex market, positive outcomes would yield positive results on the said currency pairs, and vice versa. That is, negative outcomes would yield negative results on the currency pairs that would be affected. But it is not so in the Forex market, and this is what makes trading so hard. Sometimes the outcome of an economic news release is so positive, but then the results on the currency pair would be very negative. Sometimes the result of economic news release is negative but has a positive impact on the currency pair that is being affected. Sometimes it doesn't matter whether the news is positive or negative, the currency pair doesn't move at all. That is just the dynamics of the economic news release. A lot of factors go into them. So even though you have a fair idea of it, you just have to have this in mind that we don't live in a perfect traders world. So what would you do to avoid all these mess ups that the economic news releases can cause? One, you can avoid trading in all if there is any high impact economic news coming up. Two, you can reduce your risk if you would really want to trade. And three, you can only choose to trade after the fact. With trading after the fact, sometimes the markets will move without you. Sometimes, even after the fact, the market is still volatile and risky to trade. So you just have to choose the type of risk you are comfortable with. And as we saw from the economic calendar, all economic news releases are not created the same. Some are more important than others. Even with the 3-star economic news important news, there are some that are more important. And I'm going to make mention of the most important ones, which come in the form of central bank interest rate decisions, employment or unemployment rate, the well famous non-farm payroll that comes from the United States of America, specifically if a governor of a central bank is giving a speech, that is also a very high important news. The gross domestic product of a country, GDP, or the consumer price index of a country, that is the CPI, also has the tendency to move the market very well. Those are 3-star news announcements, and there are some that comes in the form of retail sales and crude oil inventories, which are 3 stars and may have the tendency to move the market as well. These days, the economic calendar doesn't really move the market as it used to do 3 or 4 years ago, but sometimes the volatility is so high and you just can't choose to avoid it. At the beginning of this video, I actually noted that there were some extras that investing.com actually offer. If you've been an avid reader of my website, you know that I'm actually big on currency correlation. Investing.com has a powerful tool that calculates currency correlation the right way, and I would want to introduce it to you as well. It will help you become a better trader because currency correlation affects our trades in every way possible. So let us go onto the screen. We would find the currency correlation tool under tools, more in tools. Then we click on Forex correlation, which would actually take us to the correlation page. This is the default. You can choose the currency pair and select the one you like, but I'll maintain the Euro USD. Also, you can choose the time frame you are most comfortable in. I'm most comfortable in the 4-hour time frame, but the 5 hours is the closest thing I have over here. And never ever forget to always choose the period 300 because that one gives the most accuracy. After that, you click on calculate. So I'm being notified that Euro USD is highly positively correlated with the AD/USD and Euro JPY. It has a correlation value of 0.95 and 0.94 respectively, as they are in the positives. We can also see the negative areas. We can only choose 2 currency pairs at a time. So I'm going to deselect the Euro JPY and select the USD CHF. It is general knowledge that Euro USD is negatively correlated with pairs like the USD CHF and the USD CAD. So you can actually also view the charts to see how they are moving aside from looking at the correlation value. So that is it for this trading lesson. I hope you found this lesson helpful. Don't forget to subscribe to my channel. See you in another trading lesson video. Bulls make money, bears make money, and pigs get slaughtered.